Well, hello everyone, and welcome to our webinar today. My name is Adam Wilkinson, and I'm the Colour Accounting Trainer for the Holst Group. I qualified as a Chartered Accountant back in 1999. Since then, I have 16 years of accounting experience, 8 years working within the EMI Group plc, and 8 years working as a finance director at various small and medium-sized media companies. Since 2013, I've started leading colour accounting workshops with the Holst Group because I've realised how much I enjoy showing people just how easy accounting can actually be. Today, in this webinar, I'm going to help you crack accounting jargon. Over the next half an hour, I'll be giving you an introduction to the language of finance and helping to demystify some of the complexities of accounting and finance. Before that, there are just a couple of items of housekeeping that I would like to make you aware of. Firstly, all attendees are on mute to reduce any background noise that we might experience. Secondly, if you do have any problems with speaker sound, then do try the dial-in option instead. The details for the dial-in were included in the invitation you received and are also visible in the control panel to the right-hand side of your screen. Thirdly, we will have some time for you to ask questions at the end of the webinar. And finally, a recording of this webinar will be made available to you afterwards, as will the slide pack. So, what specifically will we be doing today? Firstly, I want to explore why it is that people find finance difficult to understand. What is it that makes it feel complicated and makes people fear finance? And what are the impacts of this on performance of individuals and of companies? Then we will be doing a financial literacy secrets countdown. Here I will reveal to you a top 5 misunderstandings about accounting terms that commonly lead to confusion in financial discussions. By learning these simple secrets, you will be starting your own journey towards financial literacy. You will become more empowered to engage with numbers and with your finance department because you will have a clearer understanding of what accountants mean. These financial literacy secrets are just a taster of what we cover in our colour accounting workshops. These training courses run over 1 or 2 days and are a revolutionary new way to learn finance. We use a unique visual framework that makes accounting easy to understand because you can actually see and interact with how accounting works. This means that people develop a holistic understanding of finance and financial reports as we bring balance sheets and income statements to life. Okay, so why is it that people commonly feel that finance is difficult to understand? Is it an actual fear of numbers? Well, for a few people, yes. Perhaps they may think that they are not a numbers person, but this is very much a self-limiting belief. The reality is that they probably are as much of a numbers person as they need to be. If you can subtract 50 from 200, then you do understand numbers enough to be able to make sense of financial statements. So, is it technical knowledge? Partly, yes, but actually, the technical side of accounting is straightforward once you understand both the structure of financial stories and the mechanics of how transactions are recorded. The issue isn't that accounting is complicated. The issue is, in fact, that it just hasn't been explained well enough. So, is it the language? Well, actually, accountants do have a language that is all their own. Besides the accounting jargon that accountants have, accountants also use normal words in different ways, so they usually mean something different from what you think they mean. This means that actually the language barrier is the most important factor in making finance difficult to understand. we are going to explore several examples of this barrier in our Financial Literacy Secrets Countdown. Actually, the confusion about the language of finance is very widespread. I often see adverts or news articles, either in print or on TV, that are either imprecise or incorrect in their use of financial terms. Here is a great example, an advert from Target, where they pledge to give 5% of their income into the local community. Now, 5% of their income sounds like it should be an awful lot of money to me. In fact, if you take their revenues, which are $65 billion per year, and apply the 5%, that means they should be donating $3.25 billion per year to the community. That works out at $63 million per week, far greater than the $3 million per week that they mention here. So why is there this huge discrepancy? Well, what they actually do is they donate 5% of their profits to the community instead, not 5% of their income. They've actually used the wrong language here in the advert. Now, I don't know if this is a simple mistake that they have made with wording, or if they're actually trying to mislead, but I do know that misunderstandings like this are widespread in business, and they can have very significant impacts on both people and on their businesses. So what are these impacts? Well, if people don't understand finance, they will generally have a lower engagement with their accountants or finance departments, and they will pay less attention in financial meetings. They can also have a lower motivation to address financial issues or to deal with accounting matters that arise from those meetings. Both of these mean that a business is probably experiencing ineffective communication between their operational and commercial teams and their finance department. This in turn means that inefficient decisions might be made. For example, if decision makers are not fully clear on the likely impacts of their decisions. The combined result of all of these is that both cash and profit can be adversely affected without anyone actually intending to do so. In fact, history is littered with businesses that have gone bankrupt as a result of bad financial decisions. This is why it is so important to make sure that your staff, that your teams have a true grasp of the fundamentals of finance in order to maximize the performance of your businesses. Okay then, let's get started with our Financial Literacy Secrets Countdown. Here is Financial Literacy Secret number 5. Accountants actually use different words to mean precisely the same thing. Let's have a look at an example to illustrate this. Sales, revenue, turnover, income, earnings. These are all very different words, and they sound as though they all mean different things. But actually, all of these words are commonly used to refer to just one thing. That is, the value of the sales of a business, also sometimes referred to as the top line of the business. So that's actually 6 different ways of referring to just one thing. There are also many other instances where accountants have multiple words to mean the same thing. If you are aware of these many meanings, it reduces the scope for confusion to arise in financial conversations. Okay, so before the next secret, I'm going to ask a poll, which should be appearing on your screen any second now. The question is, what does the term net mean? There are a few options here, and you can select as many as you like. I'll give you 20 seconds to read this and to choose your answers, starting now. Ten-second warning. 5-second warning. Great. The poll is now closed and the results are in. Thank you for that. So here is financial literacy secret number 4. Accountants can also use the same word to mean several different things. So let's have a look at our poll results. The question was, what does net mean? Actually, 100% of you went for net means after taxes. 71% of you said it can mean after returns. 71% of you went for after discounts. Similarly, 71% responded that it could mean after expenses, and 71% responded that it could mean after liabilities. Well, confusingly, it can actually mean all of these things. It depends on the precise context that the word net is used in. So, for example, the phrase net sales. This can refer to sales after deducting taxes, or returns, or discounts. It will depend on the specific commercial arrangements of that business. Net profit, however, refers specifically to the profits of a business after deducting its fixed or overhead expenses, whereas net assets specifically refers to the value of a business after deducting its liabilities. So the word net can mean all of these things. It can mean many different things. Being aware of this actually means you have permission to not know what is being referred to. It is not always clear. This means you can ask clarifying questions of your finance department, safe in the knowledge that it is a relevant question. Okay, here is financial literacy secret number 3. Accounting terms can also change their meaning depending on whose perspective you take. Let's have a look at an example of this. Let's consider an apparently simple accounting term such as debt. Imagine a situation where one person, Lee, owes another person, Adam, £100. For Lee, this debt is a liability. That means that it is an amount payable or owed to another person. However, for Adam, the debt is very different. It's actually an asset. So for Adam, this is an amount receivable or owed from another person. Both Lee and Adam can refer to the £100 as a debt, but we can see that they can mean very different things depending on who is talking about it. The word debt changes its meaning depending on whose perspective we are considering. Perspective is one of the most common sources of misunderstanding in finance, and being aware of this enables you to double-check your own assumptions of what accountants mean and to ask clarifying questions during financial conversations. Okay, here is financial literacy secret number 2. Accounting terms usually have different meanings from the standard dictionary definition of those words. Let's have a look at an example of this. Let's consider another apparently simple accounting term, an expense. The Collins English Dictionary definition of an expense is that it is a particular payment of money. This is therefore also what we all commonly assume accountants mean by the word expense. But unfortunately, this is completely wrong. It's actually just not the case. There are plenty of payments of money that you can make, for example, that are not expenses. You can make payments for assets or payments to reduce debts. These are payments of money, but these are not expenses. Expenses are also separate from the timing of making a payment. So in accounting, Expenses are actually when we use up or when we consume a product or service, regardless of when we pay for it, which may often be 30 or 60 days later, for example. I have often asked accountants to define what an expense is, and you would be amazed how often they get it wrong, making the common mistake of assuming that an expense is a payment of money, when it isn't. Okay, so now it's time for financial literacy secret number 1. What is income? I'm going to start this as a poll question, so you will have another multiple choice question pop up on your screen any second now. There are 4 options here, and I'll give you 30 seconds to read these and then to place your answer, starting now. "20-second warning." It's a 10-second warning. I can see that 63% have voted, so a couple haven't. 5 seconds to go. Okay, great. Thank you very much for your responses. The poll is now closed and the results are in. So let's take a look at this. Here is what income is not. It is not option 1, when cash comes in to the business. This took 25% of the vote. This is what most people usually think that income is. But this is actually incorrect, I'm afraid, as cash can come into a business for many reasons other than income. For example, you could receive cash as a loan or as an investment, but this is not income. Income is also not option 2, a monetary payment for goods or services. This also had 25% of the vote. This is the Webster Dictionary definition of income, and it's incorrect because payment of goods or services often happens separately from the exchange of the good or service itself, for example, within 30 or 60 days of the exchange. Income is also not option 4, monetary or other returns, either earned or unearned. This also had 25% of the vote. And this here is the Collins Dictionary definition of income. This one is incorrect because income has to be earned. Unearned income is not income at all. It's actually a type of liability. So, what is income? Well, income is actually option 3. 25% of you picked this and were right. It's actually when value is generated by the sales of goods and services, by the actual activities that the business is doing and providing to others. This can result either in an increase of debtors or of cash. But income is not the cash itself, as the payment usually takes place separately to the provision of the goods or services. All of that means that income is recognized and recorded by accountants when a sale happens, when the actual activity of providing the good or service takes place, regardless of when the actual payment for those goods and services takes place. Income is what you do that will ultimately result in cash, but not the cash itself. So, what are our takeaways from today? Firstly, we learnt that actually language is the biggest barrier to understanding accounting and finance, not the fear of numbers or a lack of technical knowledge. Then we ran through our 5 financial literacy secrets. Here are those secrets again as a recap. At number 5, accountants use different words to mean the same things. For example, the words sales, revenue, turnover, income, and earnings all refer simply to the value of sales of a business. At number 4, accountants use the same word to mean different things. For example, the word net can refer to net of taxes, discounts, or returns when used in the context of net sales. Accounting terms can also change their meaning depending on perspective. For example, the word debt can refer either to an asset or a liability, depending on whose perspective we are taking. At number 2, accounting terms have different meanings from the dictionary. For example, in accounting terms, an expense is not a payment of money, which is the dictionary definition. And at number 1, income is not cash being received. Instead, it is the value generated by our sales activities, which can result in either an increase in cash or debtors. The interesting thing is that accountants won't even tell you these secrets, because to them they are so natural and ingrained that they don't even realize you need them explained to you. Now that's a lot of new knowledge, and I do hope that it makes sense for you all. But this is very much just the start of a journey. Understanding the language of finance is just one of the 3 main pillars of financial literacy. The other 2 are understanding the structure and the mechanics of how accounting works in order to build a holistic understanding of how financial reports are compiled and how to make sense of them. When people understand accounting and finance, they build their business acumen because they can make informed commercial decisions. Both the structure and the mechanics of accounting are easy to understand in our color accounting workshops. This is because we have a revolutionary visual framework on your screen now that makes finance transparent and accessible in just one day. It's a visual representation of a general ledger, the system in which accounting is performed. It consists of just 5 color-coded boxes for the 5 different fundamental types of accounting data that exist: assets, liabilities, equity, income, and expenses. Everything in accounting can be explained using just these 5 boxes. This enables me to quite literally show people how financial information is classified and organized, and how individual transactions are recorded within this framework. It crucially also shows what impact these transactions have on a business performance. All of this is done in an interesting and engaging way, with the result that, in just one day, color accounting can give people a deep and lasting financial literacy. If you want to learn more about these, then please do contact us at the Holst Group at your convenience to see what we can do for you and your organizations. Okay, everyone, thank you very much for spending some of your valuable time on this webinar. I hope you have found it both useful and interesting. As promised, we now do have a couple of minutes for questions. So if any of you do have questions on any of the content, please type your question in to the questions pane of the control panel on the right-hand side of your screen, and I'll do my very best to answer. And if you don't have any questions, thank you very much for your attention, and I wish you a very good afternoon.